Another topic I'm going to discuss is most people, whether you are a rookie investor or a experienced investor, you never heard of this. But this rule has been around since 1973. How long ago? 20, almost 40 something years. You can use your IRA or retirement plans to buy hard asset rental properties. But of course, Wall Street has been brainwashing you for generations into thinking you can only invest mutual funds or stocks and bonds inside your IRA. You've been brainwashed, totally conditioned brainwashed, because Wall Street do not want you to transfer your IRA, do not want you to transfer your IRA to buy a hard asset inside your IRA. So anyway, so if you want more control, if you want more direct control of how you invest your IRA, I encourage you to buy income property inside your IRA and preserve the same tax deferral scenario, which IRA no different than the IRA that you've been gaining the tax deferral through your mutual funds inside. Does that make sense? So when you roll over your traditional IRA into a self-directed IRA, there are no tax consequences. Okay? Contrary to what your advisor may tell you. So I try to encourage a lot of my investors, including yourself, have massive amount of traditional IRAs. There are trillions of dollars of traditional IRAs got stuck in a low performing assets like mutual funds. So if you do a tax-free transfer into self-directed IRA to buy rental real estate, your return is gonna double and quadruple because income property in which you control have historically have higher return. Who does not want that? Tax deferral growth, taxable withdrawal at age 59 and a half or older, unless it is a Roth IRA. If you're lucky enough to have Roth IRA, even if you transfer your portfolio into a rental property inside the IRA, you could achieve tax deferral growth and tax-free withdrawal at age 59 and a half or older, as long as you hold the IRA as long as you hold a Roth IRA for 5-year period. Okay? All right. So I recommend that you could take an inventory of your accounts, all your financial accounts, look at your previous employer's 401k, look at all the IRAs you have, your traditional IRA, your solo 401k, your Roth IRA, your previous employer 401k, but not your current employer 401k. Your current employer 401k do not allow you to roll the money out as long as you're currently working for them. When you leave the company, yes, you can roll over the 401k into whatever IRA you want to. Okay? When I consult with investors age 40 or age 50, sometimes they cannot even keep track of how many different IRA accounts they have with different brokerage firms. Sometimes they lost track, right? They got 10 grand in one IRA with Fidelity. They got $50,000 IRA with Charles Schwab. And so you need to organize your finances, consolidate all your IRA. You have to ask yourself the question, should I roll over some, if not all of my multiple traditional IRA accounts into a self-directed IRA and to buy rental properties inside my IRA? Yeah, you should ask yourself that very hard question. And I would almost assure you that rental properties, historically speaking, have earned much, much higher returns than a traditional IRA investment mutual funds. Traditional IRA investment mutual funds or stocks and bonds maybe give you a historical long-term returns of 5 to 7%. But if you roll over those IRAs into rental properties, the rental properties on an apple-to-apple comparison with this traditional asset will give you like 15 to 20% return on an annual basis. Okay, that's all I need to say. Okay, very clear. I have helped a lot of people to use the self-directed IRA to buy income property over years, and they have done extremely well. Having said that, most financial advisors and most TPAs, they are clueless. They do not know anything about using self-directed IRA to buy income properties. Furthermore, there are another additional advanced strategies of using self-directed IRA. I will go over momentarily. Okay, I'm going to use this property as a sample case. This fourplex, okay, at 545K. So let's pretend that you are using your IRA, using your entire IRA of 545,000 to buy all cash, all IRA, this fourplex, okay, using that assumption, okay, right here, right? The IRA, okay, and then the monthly gross rent is 5,400, the annual gross rent is 64,000, that you minus the taxes. At the end of the day, based on the gross rent of this property and all that, at the end of the day, this fourplex inside your IRA, given the cash flow as reflected on this spreadsheet or this pro forma, if you will give you a monthly tax deferral income of $3,500. We're talking 13% return on all cash purchase with your IRA. Can you get 30% consistently year over year on a mutual funds inside your IRA? I would say unequivocally no. Okay, you're lucky to get 3 to 5 to 7% on an annual basis, year over year, on a traditional investment asset class inside your IRA, whereby if you find the right income property in the right locations, if you do your research, the right numbers in the various markets, okay, and with the appreciation, the rent increases in the whole 9 yards, invest in income property inside your IRA. This tax deferral growth monthly will be reinvested back inside the IRA. Okay, gross tax deferral until age 59 and a half. Okay, age 59 and a half or older, you could withdraw this money, this IRA cash flow, but you have to pay, most likely you have to pay taxes, right? When you withdraw at age 59 and a half or older. Hopefully your tax bracket is lower because you are at retirement. But another thing is, if you withdraw this cash flow money before age 59 and a half on this rental property inside this IRA, you have to pay a 10% early withdrawal penalty on top of being taxed with your ordinary tax bracket on the amount of withdrawal. So it behooves you, when you invest your IRA with a rental property, you need to, it's a long-term buy and hold, right? So you count how many years until you reach age 59 and a half. If you're age 30 right now, and you put your income property inside your IRA, you have what? Almost 30 years of tax deferral growth of this income property inside this self-directed IRA. Does it make sense? Now you see the compounding growth of this cash flow, and this cash flow going to increase hopefully year over year, because as you raise your rent, you can get more cash flow, right? And appreciation is tax deferral also inside your IRA, inside your income property IRA. So everything grows tax deferred. You do not have to file tax return on this IRA. You don't any type of withdrawal, right? Then it's not reportable on your tax return. You're buying IRA in the name of your IRA, not your individual name. Does that make sense? Okay. You're buying properties in the name of your IRA. You as an owner is for the benefit. It's for the benefit of the IRA. You okay. All right. Another strategy is, I don't want to talk too much, is that you can leverage your IRA. You can get a non-recourse loan. Okay. You can go to a non-recourse lender and help that will help underwrite the property for you inside the IRA, still inside the IRA. So therefore, if you have a property that are in good, high quality, that cash flow in a good location, it's a fairly new property or new construction property, the non-recourse lender, they can allow you to leverage your IRA with a non-recourse loan. So all you gotta do is put 40% down payment from your IRA, and the non-recourse lender will leverage your IRA. They will give you a loan, a non-recourse loan, 60% non-recourse loan to help you buy more properties. Okay, you're leveraging your IRA just like you're leveraging your conventional purchase using 25% down payment. Same concept, right? So I'm going to show you the numbers associated with using the 40% down IRA, which is we're using this same forecast, right? 40% down equals $227,000. All you need is $227,000 of IRA to purchase a $539,000 property inside your self-directed IRA. So you're leveraging your money, just the power of leverage. So your return is higher, even at 16%. Okay, so same gross rent, same deductions, everything is your custodial IRA. Your IRA custodial will do all the paperwork for you. Okay, inside the IRA. So all these gross rent minus deductions equals the loan, the non-recourse loan, little bit higher interest rate, but your loan payment, the non-recourse loan payment. Oh, by the way, the word non-recourse means that in case you default on a loan, the lender can only come after the asset. They cannot come after your personal assets. Okay, so your personal assets are pretty much protected, if you will. Not 100%, but it is protected. Okay, so it's very difficult to default on the loan, because assuming you buy a cash flow property in a very good real estate market, so the chances of default on your non-recourse loan is pretty much very slim. Okay, do your due diligence, which property, which market, which location you're going to buy, and then use the power of leverage. There's only one or two non-recourse lenders who can do this kind of loan. Okay, it's not a mainstream lending. Okay, you cannot go to your local bank and ask, oh, do you have a non-recourse loan you can leverage against my IRA or my rental property? They think you're crazy. You're talking foreign language to them. At the end of the day, your gross rent minus all your monthly expenses, including your mortgage of $2,489, or including your expenses, okay? At the end of the day, with a non-recourse leverage of the loan, you only get $630,000 or $630 of cash flow, tax deferred cash flow inside the IRA. Okay, so your loan is being processed by the IRA custodian inside the IRA. I know some of you are thinking, oh, the monthly cash flow is very low, but you have to keep in mind your IRA is a long-term wealth building vehicle. You're not going to need the money until age 59 and a half or older. Okay, so therefore it's okay if your cash flow is very low. This low cash flow on this assumption will be rolled back into the IRA, grows tax deferred. Okay, your cash flow grows tax deferred inside the IRA, not reported on a federal tax return until actual withdrawal way down the road. Does that make sense? Furthermore, what you can do, your tenant, your floor tenant that paying your rent, a total of $5,200, they are paying down the loan for you. So I know this is a 10-year, 15-year loan, non-recourse loan, but in about 10 to 15, 20 years, this loan, non-recourse loan balance is not going to be $323,000. It'll be like $200,000 or $150,000. If that's the case, your tenant is paying down the loan for you on a monthly basis, right? Loan pay down, right? Pretty simple concept. So therefore, your mortgage payment will be decreasing year over year for the next 10, 15, 20 years, to a point where 15, 20 years later, your mortgage payment will be, instead of $2,400, it will be, let's say, $1,000. So that $1,000 will add on into the cash flow. Instead of $630, it'll be $1,630. We did not even factor in the rental rate increase the rent you can raise from your tenant. At the end of the day, furthermore, since you do not need the cash flow during the growth year of this IRA, what you can do, another strategy you can do, because the IRA is such a long-term investment vehicle, if any kind of monthly cash flow you receive, albeit rather low, this $600 cash flow, you can accelerate your loan. You could pay down your loan one extra payment per month. Apply this $630 and accelerate and pay down extra principal on this non-recourse loan. In about 15 years, instead of 30 years, this $323,000 loan will be completely paid off. But when it's time for you to retire, age 59 and a half, age 60, age 61, and it's time to draw your IRA, your passive income on a monthly basis, you no longer have a loan. So this $2,489 will add into the $630 equals what? Equals like $3,000, not even factor in inflation and rental rate increases. $3,000. You have $3,000. Your loan is free and clear because you accelerate the debt payoff one extra principal per month from your existing cash flow of $630. Okay, so therefore, at age 59 and a half or later, when it's time to withdraw the money, your non-recourse loan is all gone. So if you're free and clear, you can live off the rental income of $3,000, $3,500 at retirement years. And then at the end of the day, you only put in 40% of the IRA to buy this property. The power of leverage. This is what kind of strategy is this? This is amazing. Okay, most people have no clue this kind of strategy exists, except a few handful of real estate experts like myself in the country over the years that have done this. Okay, it's not mainstream because a lot of reasons. Okay, so it's nothing wrong to get a non-recourse loan as long as you find the right non-recourse lender, which we have, that can underwrite the loan for you. So you're just leveraging. Okay, you don't need $539,000 of IRA to buy this fourplex or cash IRA. You only put down 40%, and the non-recourse lender will leverage the other loan for you, so you can get a higher return, double-digit return over time. Okay, so what if some of you are asking, what if you sell your property inside the IRA? If you sell your property inside the IRA at any time in the future, there's no tax implication because it is there's no capital gain situation. There's no penalty situation. When you sell your IRA, the entire IRA portfolio over the years, whether you invest in a rental property inside the IRA or invest in mutual funds inside the IRA, is an IRA. No tax implication when you sell the property. Not that you should sell it. You should keep this property for a long time so you can enjoy the retirement income associated with investing in real estate. Okay, then when you pass away, your children will get a step up in basis, and your beneficiaries will pay no taxes on the transfer of the rental properties, right? Step up in basis is another topic we need to discuss. Any questions you have? I know my 15-minute of IRA presentation may be foreign to some of you, never heard of it. So feel free to put down on the chat questions to clarify any you may not understand what I just presented. This is a self-directed IRA custodian. This is a very specialized strategy. There are self-directed IRA custodians that will do the custodial paperwork for you on your IRA once you transfer the rental property inside the IRA. This is some of the referral sources that I have. There are many. There are 30, 40, 50 self-directed IRA custodians located throughout the country. They can help you facilitate transfer of the traditional IRA into self-directed IRA. This company has been around for years and years, so they know exactly what's going on. They know the game, okay? And of course, the non-recourse lender, there's only two non-recourse lenders that I know of that does this kind of non-recourse loan. So I have their information. So if you're not going to find these non-recourse lenders everywhere. This is a very specialized niche, N-I-C-H-E. Very much doable. That's what you want. By the way, this gentleman want to ask me a question? You may ask me right now.
Thank you. Clarification on self-directed IRAs. Let's say in order to accumulate more capital, let's say I find a property, can I combine my self-directed IRA with a spouse's to be able to make a purchase, or would I treat those as keep those separate, but just pay for them separately?
Great question. The question is, you have some IRA under your name and your spouse has some IRA under her name. The question is, can you consolidate both of your IRAs to make it a larger IRA amount and then use the combined IRA resources to buy a income property? Is that what you're asking?
Yeah, correct.
Yes. It's been done all the time. Yes. You can partner. You can partner with your spouse. You can partner with another person who are not even related to you, right? You can combine your IRA resources. Let's say you have $50,000 of traditional IRA, and your spouse has another $50,000 of IRA under her name, his or her name. So you have a combined $100,000, right? Yes. You can combine this $100,000 of IRA 50-50. The IRA custodian will properly document the title of the property. 50% in an IRA for the benefit of John Doe, and 50% of the IRA, self-directed IRA, or FBO for the benefit of Jane Doe, right? Yeah, then you can use combine our resources to buy the income property for whatever price makes sense, right? Okay, but you can combine with more than 3 people. If you have 4 individuals, each have $25,000 of IRA under their separate account, you can combine the 4 IRAs into a self-directed IRA and buy a property for that amount. Okay? Yeah, it's been done all the time. Great question. Excellent
Great.
question.
Thank you.
A lot of flexibility, a lot of discretion is so powerful. Your returns are a lot higher. I'm telling you, I just told you right at the end now. If you buy the right income property, single family home, duplex, triplex, fourplex, $100,000, $200,000, $300,000, $400,000 in the cash flow markets, in which I already show you. But you're going to learn more about real estate investing, what markets are. Because in case some of you register late, with your implied permission, I'm going to put your email into my database so you can become a free member of our network, no solicitation, no one going to come after marketing, do any cold call to you. That way, you become a free member of the network. Every week, several times per week, you'll receive email of real estate investing information in your inbox about all aspects of real estate investing, including IRA, including everything above and beyond what you learn. Okay? So I have your email, so I'll put your email in my newsletter. Let me address a few questions. I want to learn about taxes related to rental properties while owning a primary home. So far, none of you own rental properties, and most of you own primary home. So what I hope you guys can do is find some way to allocate enough money for a down payment, 20 to 25% down payment, to buy rental properties, $100K, $200,000, $300,000. Those are the price range you should go after. Again, if you have IRAs, if you have traditional IRA, if you have a $100,000 IRA at least, then you're in good shape. You can buy income property inside your IRA. If you have at least $100,000, you're good to go. If you have more, of course, you can buy more. It all depends. All right? So you're in good shape. Even if you have when you buy investment inside your IRA, you buy under your name, under the IRA name. So you do not, when you get a non-recourse loan to leverage against your IRA, you do not need to submit your personal FICO score. You do not need to go through any underwriting on your name because you're not buying on a conventional loan. You're not doing a conventional loan under your name. You buy in the name of the IRA. So the IRA is going to do the qualifying. How? By a full cash IRA purchase. That itself is full cash purchase. And a non-recourse loan, the 60% loan to value against the IRA is the underwriter, the loan underwriter, just are looking at the property, looking at the property in which you want to buy. Okay, if your property qualify to get a non-recourse loan under the IRA, you're good to go. Okay, so the underwriter, the non-recourse lender, they're not gonna run a credit report on you. Okay, they're not gonna ask you to produce W-2. They're not gonna ask you to submit a loan document to show your statements, to show your credit score, to show your job requirement, nothing like that, right? You're buying through the IRA. Are you very clear? So there's two ways to buy real estate. The most common way is buying under your name, conventional purchase of an investment property. Either you buy all cash, most people, they have a good FICO score, they have 2 years of job documentation, and they make good income, they qualify to get an investment loan. That is how most people buy investment property. 20 to 25% down payment, someone with a FICO score of 720 or higher, at least 2 years on a job. The lender going to do a loan pre-qualification for you. Make sure you qualify to get a loan, investment loan under your name. That's how you buy. Okay. So if you have $40,000, $50,000, $60,000 of down payment money and you have good FICO score and everything else, good job documentation, good decent income, W-2, by all means, you can buy one or more properties fairly quickly. And that's what you should do, right? If you want some further consultation, contact me, I'll help you. Even if you do not qualify to buy income property on a conventional way, like I just told you, and you have IRA, you can use your IRA, you can convert your traditional IRA into self-directed IRA, and then you can buy your rental property inside your IRA, okay? If you need help, I can help you, right? Just reach out to me. Does that make sense? So there's two ways. Do you know how easy to qualify for the IRA? If you work for a regular company and you're contributing 401k for 5 years, for example, if you maximize your 401k contribution, working for a company for 5, 6, 7 years, if you make $100,000, $150,000, within 5 years, you will have accumulated at least $100,000 from your 401k. When and if you leave that job, then it's fair game. When you leave the job, then you can roll over the previous employer 401k into a self-directed IRA and buy income property in the name of the IRA. Are you clear? It's that simple. You know, a lot of people, they only work for a job for a few years. These days, nobody stay at a job for more than a few years. Imagine if you, over the course of 20 years, if you have 5 different jobs, and each occupation, each company you work for, you're contributing to a 401k, right? Why not? 401k is a after-tax contribution, tax-deferred growth, and taxable withdrawal at age 59.5. You may have 5, 6, 7 different IRA accounts spreading all over the place. You can consolidate those IRAs, make it into self-directed IRA, and determine where you want to invest in, what properties, what market, and you control your IRA inside a rental property, and you can get much higher returns. You can retire quicker and accumulate more wealth. Make sense?